Greetings, members, one and all of the Salivation Nation. Gold has ended a little bit lower for the week as the job numbers have come out and economic data is really starting to solidify as we are in the midst of a pretty decent economy right now. And so let's take a look at this. This is from Market Watch. The yellow metal posts weekly declines in 8 out of 9 weeks. We'll also discuss silver as well. Gold futures ended lower Friday, building on a loss for the week, as strong U.S. jobs data provided a boost to the dollar and supported expectations for future interest rate hikes this year. The U.S. created 201,000 new jobs in August, keeping the unemployment rate at an 18-year low of 3.9%, the Labor Department said Friday. Economists polled by Market Watch forecast a 200,000 increase in new non-farm jobs. The yearly rate of pay increases also climbed to 2.9% from 2.7%, marking the highest level since 2009. Now, this means that wages are going up, which is what we expect whenever there's a competitive job market out there. So in other words, there's more people looking for jobs now than there are filing for unemployment. Now, again, you have to keep in mind, and I always do when it comes to these types of things, as to what kind of jobs they are, and also how is a job counted? Is a job counted when one person has 2 jobs? Is that still counted as 1 job, or is that 2 jobs? I mean, for me, you could probably say I work 3 jobs, but so it's hard to say how that would occur. Am I counted as 3? I don't know. But the other thing is the U6. This is the U3 numbers. The U6 is usually it's a higher number, but even it has gone down. But nonetheless, with this all being said, I think everybody can safely agree that the economy is doing better than it was, and it's doing better in a quicker pace than it had been in quite some time. The data came in much higher than market expectations, and the major takeaway has been the rise in wage growth that will further strengthen the case for 2 more rate increases in this year, analysts at ICICI Bank wrote in a note after the latest jobs report. December gold fell $3.90 at 0.3% to settle at $1,200 an ounce, is now below that, with the precious metal logging a weekly decline of about 0.5%. Futures prices have now posted weekly declines in 8 out of the 9 weeks. The strong jobs report is seen as supporting the Federal Reserve's intention to hike rates at least once more in September, which already is expected, and possibly once more in December. The policy-setting Federal Open Market Committee is slated to convene its 2-day gathering on September the 26th. I wonder what they talk about. I wonder if those meetings are public. I'd be curious to know if there's anything going on there in Jackson Hole, Wyoming, if that's where they meet, or if maybe they're talking behind the scenes, and this is just a speculation of another reset of the dollar, because I do believe one is coming sort of in the likes of controlled version, a much more controlled and planned version than we saw with the Bretton Woods or the petrodollar situation. Higher rates can hurt the appeal of gold and strengthen the U.S. dollar, which can make asset priced in the currency more expensive to buyers using other currencies. The U.S. dollar index is at 0.41%, a popular measure of the buck's strength against a basket of 6 rivals, has gained 3.6% so far this year, creating a headwind for dollar-pegged commodities. It traded up 0.4% Friday, poised for a weekly rise of 0.3%. We remain cautious on gold over the rest of the year, with the Fed on pace to meet its planned rate increases supporting a stronger U.S. dollar, said Rob Hayworth, a senior investment strategist at U.S. Bank. Growth outside the U.S. is unlikely to deteriorate into recessions this year, limiting safe haven demand for gold. More clues on interest rate trend will come if in the August U.S. Producer Rise Index reading due Wednesday and the Consumer Price Index data due Thursday, said Chintan Karnani, chief market analyst at Insignia Consultants based in New Delhi. In other metals trading on COMEX Friday, silver fell nearly 0.1% to 14.17 an ounce for a weekly loss of 2.7%. And copper shed $2.62 a pound, ending around 1.8% lower on the week. Platinum lost 1.3% to $7.80 an ounce for a weekly decline of almost 0.9%, but December palladium added 0.7% to $9.68 an ounce, settling down 0.1% for the week. And so it's interesting. These are the times we know those of us who accumulate these precious metals, and for those of you just starting out, it may be quite discouraging to you to see these metals fall. But and this deserves its own video, and I will do a video on this. But take heart, because you're getting a good deal, I believe, on gold and silver right now. And I believe they're undervalued only in so far as much as that, where they really should be, considering the state of the debt in this country and the dollar, and the fact that the Federal Reserve's quantitative tightening just means they're easing less in printing money. And, the dollar continues to really lose value, even in spite of it being strong right now. The dollar index compared to what the dollar can buy are kind of two different measures. It's just compared to where they are at, with, it takes a while for a lot of these things to really settle into the markets, as far as, bread, milk, sugar, all those type of things, housing, all the things that people buy, and what the dollar can buy with that dollar by certain metrics. The dollar has lost about 11% of its value since 2016. So what about that? And with that being said, it seems like the commodities, especially raw commodities, are the things that suffer the most whenever the dollar is strong. But the things that they make typically don't go down in price in conjunction with those commodities. And that's the thing that people have to keep in mind when analyzing these types of things. But nonetheless, silver and gold are here as precious metals, as a hedge against economic stability, as I've said before, and they are here to help us in times of need. Well, this is not a time of need right now, economic need or struggle. And so, therefore, you can get them on sale. If you need to cash them out for one reason or another, you're in a much greater minority than you would be if the economy was in trouble, when most people need to cash out, which is why I always tell people to not put all your eggs in one basket, or in this case, to put all your silver in one safe, or all your gold in one safe. Diversify. And get other things, other investments, investments. See if you can look into those, because gold and silver really aren't investments, they are insurance. But it's going to be fascinating to see how things pop in. I think that from this report, it looks like that gold and silver will be down for quite a while. And that's the antithesis of what I've predicted. I was thinking by the end of the summer we would see the prices rise slowly, and so that by the end of the year, gold would be about $1,400 an ounce, and silver would be about $20 an ounce, or just under $20 an ounce. Do I stick with my prediction? Why not? I still think they're going to go up by then, despite even the meeting in December. I think the meeting in December will be the one thing, if they do end up rising, if they end up raising interest rates a bit more in December, it'll probably suppress gold and silver prices, but I still think that they'll be climbing up by then. It's just a gut feeling. There's nothing really to back it up. I just have this feeling, and I could be wrong. I was wrong thinking that $15 was the bottom for silver. Now it looks like it could be flirting with 13, the high 13s, coming up. And so we'll see. It's going to be fascinating to see how it all plays out. It's It's as many people have said, they're buyers no matter what, and I'm the same way. I buy no matter what. It just so happens that right now I really can't be buying gold or silver because of other obligations, and plus I just spent money on the Palladium Eagle, which is a pure collector's thing. Palladium is a fringe precious metal, and I buy it just for the collecting aspect of it. And that's why I get a lot of gold and silver coins, really, too. It just so happens they have this side benefit, a great one, of intrinsic value that lasts millennia. And also, one last thing to keep in mind with gold and silver, the bottoms that we see today are not the bottoms we saw 10 years ago or what have you. There was a time when prices were low, and they were a lot lower than they were now. There is a hard floor on these things. What that floor is I think that I would be very, very extremely surprised to see silver below $10, and I'd be extremely surprised to see gold under $1,000 at this point. Those are pretty liberal lows, I think, but I think those are the hard bottoms for both those metals. So anyways, post your thoughts below. I'd like to extend a multitude of gratitude y'all for watching and encourage you to please rate, comment, and subscribe.